Guys, things are getting serious here. Things are getting very, very, very serious here as we are getting to the most crucial part of the course, which is generating a signal and also using that signal to be able to make profit in forex trading. Because as I used to mention every day, in forex trading we have two things. We have trade execution and trade management. Trade execution can be done by anyone. You just need to give your computer or your phone to maybe your granny or your mom or your dad or whosoever. You just show that person this is a buy and this is a sell button. If that person press any of those buttons and the person is lucky, the person might come out with a profit. So trade execution can be done by any person. But now trade management is something that cannot be done by any person. Trade management is something that can be done by only professional forex traders or people who have that experience and know what they are doing. So talking about trade management and trade execution, on today's video we have something which you guys have been asking, but I wanted it to come at this particular level so that by the time we're already talking about forex chart patterns, you already have an idea about candlestick patterns, support and resistance level, zones, buy pressure, selling pressure, and all of that. So this still constitute for you to be able to still generate solid signals, because you remember my main goal on this channel is to teach you to be able to generate your own signals. So before you come out with those solid signals that you are sure you have a high probability that they're going to give you money, this is something that can still be lacking on your arsenal of trading, which is something we call forex chart patterns. So that is what we're going to be covering on today's video. Hello everyone and welcome to my channel. My name is Ndemazeah Godlove. On this channel we talk everything about trading, business, personal finance, and tips to help you stay profitable as a forex trader. So if this is your first time coming to my channel, please hit the subscribe button below to subscribe to the channel so that you can always be updated once I come up with content like this. Before I even go further to mention what we want to cover on our video today, remember this is a series of videos which by the end of this particular series, I think it's going to be 5 or 6 videos that are going to cover everything in detail you need to know about chart patterns and how to use chart patterns to execute your trade, and to also use chart patterns to determine your targets in forex trading. So on today's video, we're just going to be going straight to the point. We're going to be covering what we call what are chart patterns in a nutshell. So we're going to cover that. And then we also cover the importance of chart patterns in trading. How important are chart patterns? And then what are the different chart patterns? You need to be able to know all the chart patterns that are out there, so that if you open your chart and you see a particular pattern, you'll be able to know if to buy or sell, or maybe to stay out of that particular market. And then we'll also talk about chart patterns versus price candlestick. Chart patterns versus price action trading. And then we'll also talk about chart patterns versus candlesticks. All right, I forgot to write that one, but it is part of this course. So at the end of this video, we'll also talk about chart patterns versus candlesticks, Japanese candlesticks. So let's go to the next slide. On the next slide, let's see what is when you hear people talking of candlestick patterns, or you hear people talking about chart patterns and stuff like that. What are chart patterns? You need to understand that in forex trading, just like I explained on our previous videos, all right, in forex trading, everything that happens on your chart, that is why it is called chart patterns, because you are doing all the readment, you are doing all the judgment and all the readment based on the decisions you are seeing on your chart. So before any action happens on your chart, before any information is depicted on your forex chart, it is based on two decisions. It is based on either the buy pressure or selling pressure. It is based on demand and supply. So if the demand of that particular currency is high, the price will be going up. If the demand is low, the price will be going down. If the supply is high and the demand is low, the price. So every action that you are seeing, the market going up and down, is either based on supply, on supply and demand. Even if you are talking about news, talking about political factors, those factors will only come in to support demand and supply. Everybody in the market is doing two things. You are either buying or selling, all right? There's no other decision. Any other person in the forex market is taking two actions. You are either buying or you are either selling. So anything you're going to be doing in the market is based on supply and demand. And because of that supply and demand, there are sometimes you can actually open your chart And based on the on buying and selling pressure, based on supply and demand, there are basic patterns that can tell you that, okay, the market is going to be able to reverse at this particular point, or the market is going to be able to have a continuation at this particular point. All right, that is how chart patterns are formed. That just as the name goes, they are chart patterns. Because that is why in Forex trading you can see we have chart patterns. We have two types of chart patterns in Forex trading. We have what we call reversal chart patterns. That means a particular pattern that if you see that particular pattern, obviously you know, okay, there's a high probability. Remember what I'm saying. There's a high probability. Forex trading is a game of probability. So never say anything for sure, because if you are trading those two currency pairs, you don't know what is going to happen in the next economy. You don't know what is going to happen. Let's just stay with trading Great Britain pound USD. You don't know what will happen in Great Britain. You don't know what will happen in the United States. Those are two economies involved. But now, since we are using our chart, we base our decision. We make our decision based on what we are seeing on our chart, and that constitutes about 95% of our Forex analysis. And the 5% is now what we call unforeseen circumstances, which can occur, natural disasters and everything. If a natural disaster occurs in the United States or in Great Britain or in Canadian dollar, if we are trading the Canadian dollar, obviously it's going to affect that currency pair without you even knowing. That is why I always say it is a game of probability, and be able to treat it as a game of probability. So now there's some patterns that when you see those patterns, there's a high probability. Remember, there's a high probability that the market might be changing direction if after the occurrence of that pattern. Then there are some patterns that when you see, there's a high probability that the market might be, it is showing you very clearly that the market might be gaining more momentum on that particular direction, or the moment might be gaining more momentum on the same trend. So that is what we call continuation patterns. So we have reversal patterns and continuation patterns. Reversal patterns and continuation patterns. That is why here we just have some few patterns like head and shoulder patterns, rising wedge, we have double bottom, double top. So we'll get into that, we'll get into all of this on our subsequent slides. Let's see what we have here. So importance of chart patterns. What are some of the importance? All right, because you hear of chart patterns, you hear of all of these things. So what are the importance of chart patterns? You can see the first important that we have it is say, how do I find it? So it helps you to be able to find potential entries in rising. All right, so it helps you to be able to determine your potential entries, to be able to know potential entries in the market. So like I just explained earlier, a particular pattern will be able to tell you that, okay, let's just take something like double bottom, double top. We'll get to it, but double bottom, double top is just when the market comes down like this, reach a particular level where it changes direction, goes up a little bit, then come back to that same point. Okay, let me take this again. So let me take something like double bottom, double top. All right, let me take something like double bottom, double top. In a double bottom, double top, that is where the market comes to a particular level, test a particular level, go up, then come back and didn't break that particular level and test it again, forming what we call a W shape or a double bottom. Here we have our first bottom, and here we have our second bottom. All right, that is why it is called a double bottom, because the market tests that particular level 2 times without breaking that particular level, showing you that at that particular level the buyers came into the market, and the neckline or this area got broken, and the market has already changed direction. So you see, just seeing this particular pattern, and I'll teach you how to be able to spot this kind of pattern. Just seeing this particular pattern alone, you already know that, okay, the market direction has already changed. Now it's time for me to buy. So the next question will be, where should I buy? And once you already know where to buy, where am I going to be able to put my target? So where are you expected to put your target to be able to come out with a profit? All right. So with that being said, then how can chart patterns offer potential entry signals? That is another thing. So chart patterns also help you to be able to come up with potential signals, So by seeing those patterns, you'll be able to know if there's a probability that the market will go down, or if there's a probability that the market will go up. Then at the end of chart patterns, this is another question you should be able to also have. How do I know when to get out? All right. So when do I know when to get out, exit a signal, either to take profit if the chart patterns worked, or cut my losses if the chart patterns fail. All right. So in forex trading, there is nothing that is 100% guarantee. But now, what you have to do is to be able to have a mechanism that prepares your mind so that even if the market doesn't go your way, at least you know where to get out, you know where to get in, you know where to get out. All right. Because there is no strategy that is 100% profitable. But the reason why we are still making money in forex trading every day is because we've already have systems in place that enable us to be able to know that, okay, I am fine to get out at this particular level if the market doesn't go my way. And if it goes my way, I am fine to take my profit at this particular level. So chart patterns also enable you to be able to have that in place. Chart patterns also enable you to be able to know when to get in and when to get out of trade, to be able to set good targets in forex trading. Now, the next thing and a very important thing is, and what are the different chart patterns? We already spoke about different chart patterns, but we'll go into all of these chart patterns one by one to be able to tell you how to use them to generate potential signals. All right? Because anytime I see a chart pattern, it is like you finding a bomb which is hidden somewhere. As soon as you see that bomb, there's a potential for that bomb to explode. All right? It's the same thing with chart patterns. Immediately you see a particular chart pattern which is a favorable one, there's a potential that if that pattern is broken, or if you are able to trade properly with that chart patterns, the profit are normally very high. The risk to reward you can put on those trades are usually very, very high. So on this slide, on the different chart patterns that we have something like double bottom, double top. I already explained to you. You can see this is a double bottom, one bottom, the first one and the second one. And double top is just the opposite, all right? We have the first and this, 1, 2. So double bottom and double top. That is a reversal. That is a typical example of a reversal pattern. As soon as you see that the market has already changed direction. But now the question will be, where can you get into the trade, or how do you manage your trade? I'll be able to teach you that on our subsequent videos. So please make sure you watch to the end, and make sure you watch the next video that will follow this on the playlist. Then another one we have is head and shoulder, or invest head and shoulder. It's very simple. If I stand here, I have my shoulder here, I have my shoulder, the second shoulder here, and I have my head. So there's a time you see the market will go up, come here, it will try to reverse a little bit, then when it goes up again, it breaks this particular level where they call the neck line. It breaks this level, come up, then pull down again, right to this level, and then come down again, form another neck, then go in the opposite direction. That is a typical reversal signal. Anytime you see a head and shoulder, don't even think twice. Don't even worry yourself. The market has already changed direction, all right? So we'll talk about head and shoulder patterns, rising and falling wedges. We'll talk about bullish and bearish rectangles. So a rectangle, you know, a rectangle is like this, right? I don't know. Then triangle is like this. So these are still patterns that you can be able to use to determine potential signals in forex trading, and I'll be able to show you that. Then bearish and bullish pennants, I'll be able to also teach you that. Then triangles, you have under triangles, you have what we call symmetrical. You have symmetrical triangle, you have what we call ascending triangles, and you have what we call descending triangles. These patterns are so sweet. Once you're able to know how to use these patterns, trust me, as soon as you open your MT5, in a day, you'll be able to see a lot of signals that you can come out with a risk to reward of at least 1:2 or 1:3. All right, let's go to the next one, where we're talking about chart patterns versus price action. All right, chart patterns versus price action, because you can be asking yourself, okay, I remember on one of your videos, you've spoken about price action, you've spoken about support and resistance, you've spoken about candlesticks, you've spoken about this. Let me make this very, very clear. If somebody walks up to you and the person tells you, okay, I'm trading today with a price action strategy. Just mentioning price action strategy is a big envelope, all right? Price action strategy alone is a big envelope. Inside price action, you have more than 20 different strategies that you can use. More than 20 different price action strategies. So you have price action strategies, you have fundamental strategies, and you have sentimental strategies. Now we are all of these videos we're talking about price action strategies, all right? So price action alone is a big envelope. Talking about you trading support and resistance, looking for your entries on support and resistance, or using support and resistance with candlesticks to look for a signal, which I taught you guys already on my previous video. That is part of price action. That is another strategy under price action, all right? So price action is a big envelope like this. You have here, this big circle is price action. Then inside, you might have now support and resistance strategy. You might have break and retest strategy. You might have candlestick strategy. You might also have price patterns. You might have now price patterns strategy. So you see, so all of this is inside price action. All of these strategies, support and resistance strategy, break and retest strategy, candlestick strategy, price pattern strategies, all of this is under price action. So don't get yourself confused, all right? So talking about candlestick, so from my explanation, price pattern is part of price action trading. All right, so don't get yourself confused, because on the last video, on my last videos, I taught you guys how to use support and resistance with candlesticks to come up with solid signals. This video is not going against anything on that video. It's just another strategy. This video is just another strategy, which is what we call the price pattern, all right, or the price pattern or the chart pattern strategy. So those are two different price action strategies. If you are using just your support and resistance, because here you can see we have our support line clearly here, and we have our resistance line somewhere clearly here. So if you are somebody who is using support and resistance, here this is a clear entry signal. We have an entry signal here to get into the market, and your next target is what? On your resistance. This is your support. This is your support, and this is your resistance. You buy here, your next target is to get out here. When you got here, this is a sell signal here, this bearish engulfing candle. You get in here, you sell here, your next target is to get here. So that is, at that point, you are using support and resistance to trade, all right? You are using support and resistance to trade, which is a strategy under price action trading. Now, when it comes now to price pattern, you can see we have something here which is called a triangular pattern. This triangular pattern, once you see the market, is like you throw a stone, it goes against the wall, then the pressure or the momentum or the force on that stone start dropping out. That's why you see something, the market will go up. The market will go up with momentum, then you see that momentum start down out. It's very simple. When it start down out, that is where you link those points to form this triangle. At this point, you don't know where the market is going to break out. You don't know if the pressure is going to burst and continue going up, or if the pressure is going to burst below and continue going down. That is why we have this particular triangle. And it is a form of a chart pattern. It is a chart pattern that as soon as you see this, I'll be able to teach you now how you can be able to know where to get into the market, how to place your target, and how to come out with a profit using only a price pattern, or using only price patterns, all right? So those are different strategies for you to be able to test out support and resistance strategies. You test out break and retest strategies, and then you also come to price patterns. You use all the price patterns, which I'm going to teach you guys on this particular series, to also come out with different signals. So they are purely different things, and it's not like one is contradicting the other one. All right. So with that being said, I hope I am very clear. Price action trading is a big envelope which constitutes different price action strategies. While a chart pattern is just a strategy, which when that particular pattern is formed, it tells you to either buy or sell a particular currency, all right? Here's the same thing. Let's talk about chart patterns versus candlestick patterns. A chart pattern, as I said, is just a particular pattern that you see on your chart that will tell you to either buy or sell a particular currency pair, or which will either enable you to set your target. But a candlestick pattern, you can combine now a candlestick pattern with your price action. You can combine a candlestick pattern with a price pattern to be able to come out with a solid signal, or to be able to know where to enter into that trade. All right. So now a candlestick plus this is like what I used to say. For you to have a good solid signal in forex trading, you need three things. You need what we call a structure. That's the first thing you need. You need a structure plus confirmation. After your confirmation, you need structure plus confirmation plus your entries equal to a signal. All right. So you need three things to be able to come out with any solid signal in forex trading. Whether you like it or not, any solid signal which will be able to give you profit consistently must constitute this. Your structure, remember your structure. Here, the structure we are talking about is our chart pattern. All right, maybe we are using double bottom. If we're not even using this one, maybe we are using double bottom, double top. So we already have one bottom, we already have the second bottom. Now, where are we expected to get into that trade? That is where you come in now. You need a confirmation, all right? So that confirmation, that is where we'll bring in now candlesticks. We'll be able to bring in candlesticks. Maybe we'll be able to say, okay, as soon as we see a big momentum, or maybe 3 white soldiers, or any candlestick confirmation at the neck, because this is where we call the neckline. If we see any candlestick confirmation at this level, which shows that there's high momentum in the market at this level, we'll get in. So that is now our confirmation. So structure plus confirmation plus now entries. So since we already know that, okay, this candlestick is already confirming that we'll get in at this particular level, where are we going to place our entries? Because it is good for you to predefine any risks. Always predefine any risks in forex trading before you even get into that trade. That is what we call trading psychology. So we are already gradually going to the advanced level of the course. Before you place any trade, either buy or sell, you should already predefine the risks to say, okay, if the trade goes my way, I'll comfortably get out at this particular level. Or if it doesn't go my way, I'll say, okay, it wasn't a good trade and I'll get out at this particular level. With that, you're already removing that pressure from your brain. You're already telling the market that I don't care what you do. I've already done my own part, so do your own part, all right? So with that being said, you see, we already have our structure, plus our confirmation, plus now our entries, which we are already determining those entries. Now, okay, if we are buying here, that is where we'll be using now what we call risk to reward. If we are buying here and our risk is from, let me change the color of this. If we are buying here and our risk is from year to year, let me call this our risk. If our risk is from year to year, then our target must be what we call 2 arrow. All right. So if we are risking $10 here, we must be targeting at least $20. If we are risking 50 pips here, we must be targeting at least 100 pips. All right. So any trade, before you place any trade in forex, if the risk to reward is not at least 1:2, then that trade is not invalid. That trade is not valid. The trade is invalid. Move to another setup. Move to another trade. All right. So I hope I'm very, very clear on that. That is how you're able to determine any solid structure, and don't be confused between So don't be confused between chart patterns and candlesticks. Candlesticks are just there for confirmation. They help you to be able to confirm. You can either use it for confirmation on support and resistance, or you can use it for confirmation on chart patterns. All right. So don't get confused also between chart patterns and candlesticks. So with that being said, we've come to the end of this particular slide. If you have any question, please drop a question on the comment section below, and I do promise to get to you on any question on this video. I promise to reply. And if you want to join a community of forex traders that share ideas on a daily basis, please check the link below to join my Telegram channel. And also, if you are looking for the best forex broker, you might know all these strategies, but if you don't have the right tool, there's no guarantee that you'll make any money in forex trading. So if you are also looking for the right forex broker, then please check the link below to be able to sign up for the best forex broker, which is IC Market. And make sure you watch this video, which is going to be the first chart patterns, and also make sure you watch this playlist, which covers all the videos on the particular course. And also, if you like the way I teach and you gain something from this video, then also click here to subscribe to the channel. Till then, I'll see you guys on another video.